Okay, finally we're going to be looking at the comp Q, and again this is Friday afternoon, the 3rd of September after market close. Must remind everyone that everything we speak of here is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. We have an internal trend line similar to the other two indexes. It was not as exact as the other ones, but close enough. We just broke back up above what was the neckline of the head and shoulders, left shoulder, head, and shoulders, and it was actually a double bottom. It lined up very symmetrically, very horizontally across the chart here. Also interesting to note that the swing low here is actually also a gap, and a gap can also act as support or resistance depending upon whether you're coming up or going down. Even though we went through here fairly swiftly, one would think, well, the gap is filled, it shouldn't be an issue coming down. It could be. If we do continue up this way, and I'm not sure that we will, because today we put in a hanging man type of a pattern, and it was put in right at this swing high that occurred here in mid-August, and also another gap, and so we have to pay attention to this gap on the way up in terms of resistance. If it breaks through here, then the first area we're going to look at is the 200 simple moving average, and then this shelf that was put in here above 2300, and we need to pay attention to that. If it breaks up above there, then we're looking at the swing high at 2350 in June, and over here this swing high, which is at 2435, and that was put in May, and then we have the April high that we need to look at. Now on the downside, again, I already pointed out this level right here, which is the neckline. Breakdown below there would be at 2100, which is this swing low from July, and also the recent low that we just put in here, and it lines up fairly symmetrically. You can see here that the stochastics is pushing up toward the overbought area. It has not yet gotten there, so it tells me it may have a little bit more push to go. And we did have a crossover of the MACD line over the signal line, and the MACD histogram is above the zero line, showing some bullish momentum. So it could very well be that we have a little bit more push, maybe up to the 200, but we do have to contend with this gap that we see right here. So what I would say is, again, a channel situation. I would be looking at a channel maybe between, on the upside, 200 and down here to this neckline low. Okay, I would suggest you pay attention. It's an awful choppy market, and be on your toes, be nimble, and make sure you're diversified and position sizing is prudent. Again, this is Mark Espy with MarketTamer.com and OptionsRevolution.com, wishing you a good week of trading, and I look forward to talking to you next week.